$47 billion. The firm is seizing on investor demand as its business roars back from the pandemic slump. The listing adds to an already...
Morning, everybody, guys. I'm going to place in order to sell short euro. Price I'm looking 120.93. Okay. Let's see.
Leaders are set to back a landmark stimulus package after Hungary and Poland dropped their veto, or at least a compromise has been found by Germany with the East. We'll get the latest live from Brussels next. This is Bloomberg.
Well, we've got to be doing a lot of community engagement and community outreach to get people to understand the two things that bother people. They say, well, maybe we did this too quickly. They need to understand the speed is really a reflection of the extraordinary scientific advances that have been made that allowed us to do things in weeks to months that normally would have taken several years. That was not compromising safety, nor was it compromising scientific integrity. The process that went into deciding the safety and efficacy was both independent and transparent. We need to make sure people understand that.
Anthony Fauci speaking there at the 3rd annual Bloomberg Health Summit with Katty Kay. He was discussing the importance of convincing Americans COVID vaccines are safe. EU leaders are set to approve a landmark stimulus package after Germany brokered a compromise with Hungary and Poland to lift their veto over the deal. The agreement paves the way for a flow of $2.2 trillion to the continent's battered economies. For more, Bloomberg's Maria Tadeo joins us out of Brussels. So for once, we're going to talk to you about something other than Brexit, Maria. Tell us about
very
Orban
excited.
sort of backing Dan. Yes. Well, I mean, almost, you know, it's a big deal here. $2.2 trillion, the future of the European Union, the future of the global climate. I mean, it's huge.
Matt, it's huge when you look at the amount of money. It's huge, of course, for the European Union, and it's particularly huge for countries like Italy and Spain because they are depending on the recovery fund. They need that flow of money, and this would guarantee, in principle, that the recovery fund would be operational by 2021. Now, on the table, we know there's a compromise that's been cut by Poland, Hungary, and the Germans. The reason why the Germans have been all over this, it's very simple. First of all, they hold the rotating presidency of the European Union, but also this is very much seen as an internal affair. Angela Merkel and Viktor Orban, funnily enough, do sit in the same political family here in the European Parliament. Now, based on what we understand will be in this agreement, you could say it's a very elegant climb down that Viktor Orban has been offered by the Germans. He would, to some extent, be able to say he's been able to separate the funding from the politics, but ultimately the wording on that document over rule of law, and that is the connection between the money and the executive aid of a government would stay the same and very much enforced by the institutions. So you could argue, as I say, it's a climb down for Orban, but it's been done in a way that he can take it. And the question now becomes, will it be good enough for the more progressive democracies here in Europe? Is Mark Rutte going to take...
Okay, new position open, short position on euro against dollar at 1.2090.
In part, we know that Ursula von der Leyen, after her dinner last night, she is going to brief leaders in a few hours. Maybe she's briefing them on other things as well. But we know that she'll be briefing them, talking to them about what happened at that dinner. What do we expect?
Yes, Anna, and that briefing will be key. That's what I'm being told. It really is about her perception from that dinner that lasted almost 3 hours yesterday. They said it was interesting, it was lively, but it really will be the perception coming from the Commission and the head of the European Commission, whether or not she now believes the Prime Minister is serious about a deal and can get to a compromise. So that briefing will be key. And we also understand that that is very much the only contact that European capitals will have with Boris Johnson. This will be kept in-house. It really will be the Commission that will lead the talks until Sunday now. But of course, it will be interesting. Brexit not officially on the agenda, but European leaders will talk about it. It'll be interesting to see what we hear from now until tomorrow coming out of that meeting that is starting in a few hours here in Brussels.
Okay, Maria, thanks very much. Bloomberg's Maria today joining us there from Brussels. European equity markets then fairly flat overall, but that hides a big divergence. We've got FTSE 100 moving up by 0.4%, something much flatter on the DAX. The pound, as is often the case, seems to be the differing factor there. So European markets making some very, very modest gains this morning. Up next, we'll talk about tech. It's been something of a theme hanging over markets in the last 24 hours. That's next. This is Bloomberg.
Welcome back to the European Open. We are 30 minutes into the trading day. Let's go ahead and take a look at what's going on in terms of stocks, the direction, and the individual movers in terms of the industry groups. Here you can see the stocks 600 is very little changed, and it's been up and down between gains and losses all morning long, well, all 29 minutes of it. Take a look at the GRR page, and you can see which industry groups have been moving higher and which have been moving lower. Energy is doing particularly well today, as well as FB&T. Anna, what is FB&T?
Food and beverage?
Food, beverage, and tobacco. I'm going to guess food, beverage, and tobacco. They've recently changed these groups. So smoking, drinking, and eating, three things that people will probably never quit doing, also doing well today. So that's a fairly defensive one. Technology is doing poorly, and that's on the back of the Facebook story that we're going to talk about briefly. Let's get the first word news right now. For that, we go to Laura Wright in London. Laura?
Thanks, Matt. Brexit negotiators have until Sunday to come up with a deal. That's after a dinner between Prime Minister Boris Johnson and European Commission President Ursula von der Leyen ended without a breakthrough. The two sides will continue talking, despite major differences still remaining over fishing rights, competition rules, and the enforcement of a deal. US lawmakers are working on a compromise pandemic relief plan, but they've yet to resolve the deadlock over business liability and aid to state and local governments. House Speaker Nancy Pelosi and Treasury Secretary Steven Mnuchin are still optimistic a deal can be reached. Pfizer says some vaccine documents it sent to Europe's drug regulator have been accessed in a cyber attack. It's the latest attempt to steal research on coronavirus. The European Medicines Agency is launching an investigation alongside law enforcement. The hack is not expected to have any effect on the timing of the vaccine review. Global news 24 hours a day on air and at Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. This is Bloomberg. Anna, Matt.
Thanks very much, Laura. Laura Wright here in London. Now, Facebook has been sued by US antitrust officials and a coalition of states. They're accusing the company of trying to illegally crush competition through its acquisition of Instagram and WhatsApp. It's the biggest regulatory attack against the social media giant in its history. For more, Matthew Bloxham, media and tech analyst for Bloomberg Intelligence, joins us. That's the context then. That is the size and scope of this. This is potentially, I suppose, Matt, pretty huge. What are regulators going after here?
Yeah, hi. Yeah, I mean, that's pretty huge. I think the issue with the regulations is that there are lots of different regulators, not the US, but Europe too, and they're looking for lots of different things, and sometimes those things they're looking for are quite contradictory. You know, I guess at the pure level, the antitrust authorities are looking to create enough oxygen in the internet market for new upstarts to come along and be able to grow and challenge people like Facebook in the future and give customers more choice and new innovation. But I think obviously that, you know, we've had a lot in the last few months about censorship, about policing content on the internet. And so I think, you know, some regulators, some policymakers are looking to people like Facebook to do a much better job of being essentially a policeman for the internet and content that's on there. But, you know, we've heard before that the Republicans, you know, feel that some of these internet giants censor right-wing views, but on the other hand, you know, there's a lot of kind of issues around child protection there too. So it's quite a kind of messy and complicated path that Facebook and others are trying to navigate at the moment.
How likely is it, Matt, that Facebook would actually be broken up, and what would that look like?
Yeah, I think the risk is definitely there. I personally think that it's ultimately quite low, and maybe they'll get away with some kind of, you know, fairly hefty fine. But, you know, it's definitely possible. I mean, you know, I think if they were to be broken up, then essentially they would be asked to divest Instagram and or WhatsApp. I think from a financial perspective, you know, divesting Instagram would be the biggest financial issue for them because it's probably about a third of their revenue and delivering most of their revenue growth at the moment. WhatsApp doesn't really generate anything for them at the moment, but they have big future plans for it to generate revenue. And they've been spending the last year or two actually, bringing all those different platforms much more tightly together and getting them to share a common technology platform. So I think the longer this kind of process goes on, the harder it gets from a kind of technical perspective for them to unweave these different applications.
Yeah, for some time then, Matt, we've been talking about how other big tech firms, well, how various big technology businesses should be a little bit nervous about regulation. Does this have any read across into other big technology companies? Should they be worried about being targeted?
I think they should for sure, and I think they're already expecting it, to be honest. Obviously, Google's already been put in the sights of the antitrust authorities, but we still have Amazon and Apple, which are probably sitting there waiting for their own lawsuit to appear with their own specific gripes against them. But the antitrust side of things is just one part of the process. Obviously, we had those big congressional hearings earlier in the year, which are looking at the kind of broader issues around how you regulate this industry and the big players in them. So as well as having to fend off gripes about potential alleged sins of the past, they're also going to have to be working on the kind of forward-looking policy issue and how new legislation might be crafted, not just in the US, but in Europe and other major parts of the world, how that's going to look and how that's going to influence their businesses going forward. So, I imagine, they've all been beefing up their policy departments for quite some time, and I imagine they'll be putting more and more money into those departments going forward because they're having to fight battles on at least 2 or 3 different fronts.
All right, Matt, thanks very much for joining us. Matthew Bloxham there from Bloomberg Intelligence. He covers tech and social media for us there. Now, SoftBank shares surged as its paper profit from the initial public offering of DoorDash hit $11.2 billion. DoorDash shares closed up 86% on the first day of trading, giving the food delivery company a market cap of $60 billion.
One half of our goal is building the largest local commerce marketplace in which we're bringing everything inside your city to you in minutes, not hours or in days. And the other part of our goal is to make sure that we can take the products we built for our marketplace and give them to merchants in the form of ordering as a service, logistics as a service, so that they can build an end-to-end technology solution.
For more, Bloomberg's Danny Berger joins us. We've been talking a lot, Danny, about IPOs. Will we see Airbnb follow DoorDash when it comes to this kind of pop?
Matt, in a word, yes. It's extremely likely. The trends are all in Airbnb's favor. Of the 21 IPOs, tech IPOs we've seen come to market that priced above their range, 20 of them have seen this big pop on their first day of trading. There's a lot of interest in Airbnb. We know this because it's pricing at $68. That's above the range. So clearly some oversubscription there, a lot of attention and desire to get this IPO. But also what we're seeing with the IPOs this year is sort of this environment where, one, you have a lot of retail traders who want to get into the IPOs. We know Robinhood has been really huge and important in moving markets. And then at the same time, the float tends to be pretty low for these tech IPOs. It was an effect we saw with the Snowflake IPO, for example, where a lot of institutions just didn't want to sell. So the supply-demand dynamics are in favor of shares moving higher. I should point out it wasn't just DoorDash that surged with a debut yesterday. C3 AI, a tech IPO, also surged 120% yesterday.
Yeah, really interesting that the Airbnb follows in that path. If it does then, Danny, because, why is now a time that we're all of a sudden seeing these tech IPOs come to market? There's a lot of really interesting dynamics. Just thinking about Airbnb, yes, it's tech, but it's also hospitality. Hospitality hasn't been doing well. It's not a hotel business, though. It's a very different kind of hospitality business. And in broader hospitality, we are seeing those recovery plays. So there's a lot of different sort of crisscross dynamics when it comes to Airbnb.
Yeah, it's almost like the the perfect sort of scenario for Airbnb to come to. Because one, if you're treating Airbnb like a tech IPO, it's a really good time for it, which is why we're seeing all these tech IPOs, in that just growthy sort of names tend to do better during economic downturns. That certainly applies to growth IPOs when there are lots of demand there. And then, as you say, Anna, Airbnb is a bit of a play on hospitality as well. And if you think it's going to come back, Airbnb, that is certainly a play you can make there. So the environment is ripe. The question will be, this $47 billion valuation we're expecting when it lists, can that hold up? What happens to these tech stocks when the economy normalizes? Not just Airbnb, but something like DoorDash. Is that still going to do well when people are mostly going out to eat again and not ordering food in? Look, it really has yet to be seen whether these valuations are justified, especially for these companies which are still not really able to turn annual profits, but still the interest is there. People happily buying these IPOs when they list. Matt, Anna.
Danny, thanks very much. Danny Berger with the latest on these IPOs stateside. 40 minutes into your trading session, we'll get back to the subject of Brexit next. No deal, but a new deadline. Sunday is now the deadline. Brexit talks will continue until then. As big differences remain, this is Bloomberg. Welcome back to the European market open. 43 minutes into a trading session that looks increasingly positive. The DAX fairly flat, but elsewhere we see some modest gains for European equity markets, despite concerns around tech sell-offs that have been dominating the global markets over the last 24 hours. Nasdaq futures do still point modestly to the downside. Back to the UK story. Boris Johnson's dinner with Ursula von der Leyen aimed at breaking the Brexit trade deadlock. It has ended, of course, without an agreement. We know that, and we didn't really expect an agreement in any complete sense. They are still going to be talking. A new deadline has now been set to reach some kind of deal by Sunday. Joining us now is Matthew Goodwin, University of Kent Professor of Politics and International Relations. Professor Goodwin, really good to speak to you. I wonder what the domestic considerations are that international viewers need to be aware of here. So what are the dynamics, the balancing factors that Prime Minister Johnson has in his mind as he is working out how much ground to give or not in these talks?
Well, firstly, is the fact that this weekend Boris Johnson is celebrating the one-year anniversary of his election victory, the largest majority since Margaret Thatcher's final victory in 1987. And that was entirely based on this promise that he would deliver a meaningful break from the European Union. Secondly, his whole electorate has been realigned around working class voters, pro-Brexit voters, social conservatives who want to see meaningful change in that relationship with Europe. And thirdly, these existential differences that run through this negotiation. This is not transactional politics. This is about philosophy. And Brexiteers are arguing, what is the point of voting for Brexit, passing the withdrawal agreement, and then signing up to something that does not give the UK clear divergence from the single market? And those philosophical differences are very real and long-standing.
I wonder, you know, I was talking recently to a fairly conservative British old boy, and he basically said he doesn't buy the idea that the EU would really offer a level playing field, and he points to the amount of state aid that Germany is prepared to give its companies like Lufthansa, and he says it would be unthinkable for Boris Johnson to go into an agreement where the EU gets to make the rules on competition and, you know, be the referee. Does that make sense?
Well, that makes complete sense. If you put yourself into the shoes of an average conservative Eurosceptic, the first thing you have to keep in mind is that you've been shaped by more than half a century of our Eurosceptic tradition. We are with Europe, but not of Europe, said Winston Churchill. And ever since the 1950s onwards, Britain has been the awkward partner of Europe. Now, why? Because Britain assumed it was joining an economic trading relationship, not a political, social, or necessarily legal relationship. And that's why I think the Brits have always stood well apart from the European Union. And of course, Johnson himself, having written for the Telegraph, having edited The Spectator, I mean, he is right in the center of that tradition that argues that, well, ultimately what this is really about is a long national tradition of judicial independence, of limited government, and of having accountable and transparent institutions at the heart of our democracy. So I think for those who are saying Johnson will inevitably blink and sign a deal, I think actually we should urge some caution. We need to remember where this school of Euroscepticism is coming from, and it's very committed.
What would the impact be of no deal then, Matthew? And I'm not thinking about the economics here. We talk about that often. I'm thinking about the relationship that would remain in its place. Would that reduce your expectations of further deals in the future, of geopolitical cooperation on all kinds of other matters, if we don't see some sort of deal come to here?
If we end up with a no-deal scenario, which I think, you know, we still have a long way to go until the end of the month, and I don't think, by the way, that this deadline of this Sunday is as meaningful as some.
Okay, I'm placing a stop on profit for euro at 120.91. Okay.
With a pinch of salt, but they suggest that over the long run, over 15 years, the impact of a no-deal Brexit on the UK economy could be greater than the impact of coronavirus. But we also need to balance that with the simple fact that a lot of the folks who ended up voting for Brexit in the first place weren't doing it for economic reasons. They were doing it for...
Position closed at 120.91. We have £200 in profit.
Is a parallel strategy of trying to really sign up as many agreements elsewhere in the world to try and kickstart what Johnson calls his global Britain vision, which essentially is what 2021 will all be about, which is redefining, repositioning Britain in the wider world and being less reliant on that trading relationship with the European Union.
Professor, is the only way a deal is the only way to make a deal Boris Johnson blinking? I mean, it seems the EU wants to make sure the UK is willing to compromise, but the EU isn't willing to compromise at all. Is that the case?
Well, both sides have different incentives, and my argument would be that the entire internal logic of this negotiation was really always going to bring us to this gridlock, because from the perspective of the European Union, which is entirely understandable, they don't want to compromise or violate the single market area. And from the perspective of the UK, they're saying, well, why on earth did we vote for Brexit if we can't have any meaningful divergence around fishing, around business competition rules, or even how a deal will be policed? So both of those schools of thought are taking these two sides really to the extreme.